Insiders are selling, this time their fastest rate since 1988. But what does it mean for us as traders and investors? In today's video, we'll look at the US dollar breaking through key support, gold going absolutely ballistic, and the S&P 500 making an all-time high. Is now the time for dark pools to come through? Well, in today's video, we'll take a look at the options flow and everything that you need to know about the end of January and the data that presents for the markets right now. Stocks, commodities, and cryptos, let's get into it together. Well, welcome back everybody to the Daily Show. My name's Tom, and in today's video, there is a lot to discuss because, of course, as we suspected, post-CPI, there was a lot of breadth and squeezing going on in the market. That may be about to change, though, as we've seen some large dark pool transactions come through late last week. Before we get into the data and share it with you guys, though, if you are from Brisbane or Perth in Australia, make sure to check out the links in the description down below because spots are starting to fill up for our free Perth and Brisbane events that are coming very soon in February. Make sure to come out to them. They are absolutely fantastic, and it's going to be awesome to see you guys there. So let's talk about the White House for a moment, as it has been all over the news recently since Trump's inauguration last week. Now, why is it this time? Well, it turns out the $200 billion valuation on TikTok is now being bought up as Oracle, Microsoft, and other US investors are looking at potentially doing a deal. What do you guys think, though, about this? Oracle stock is obviously going ballistic post Project Stargate. But what do you think about $200 billion? Is that too much for TikTok? I'm really interested to hear your thoughts. Let's now get into the data, though. What exactly is going on? It looks like people are kind of losing a little bit of fear in these markets, and this chart absolutely demonstrates that. Now, insiders aren't. Insiders are actually selling, which you'll see in a moment. But let's take a look here at what exactly is going on in these markets, and that is that there is no fear. Puts are at their lowest levels in years, and this always has the potential to cause one of those flash crashes. Just remember, the worse this gets, the more likelihood there is one just around the corner. And this is something we're going to be tracking in 2025 as we continue through what we believe is the late stage cycle of this bull run. What about corporate insiders, though? Are they dumping shares at a record pace? Well, as it turns out, the answer is quite simply yes. This is one of the worst sell records, and that's bad because, of course, they're selling since 1988. Basically, insiders are sick of the valuations on these markets or something, we don't know, and they are selling off. Now, you might say, well, is that something we should be worried about? Well, remember, insiders tend to be early, but at the same time, they can be off by even 12, 18 months or even more. So you've got to remember, it's one of those signs that you can't time in the markets, but instead should be aware of. Now, why are they selling down? Well, it's probably something like this. Since 2021, we've kind of been in a bit of a cheaper market, but we're starting to get back up there when it comes to Magnificent 7 forward PEs, and just in general, the whole market is starting to reach those all-time highs when it comes to these valuations. And this has many people concerned, and probably rightfully so. But here's a good stat, an all-time high. Now, you may not know this, but 97.2% is the percentage chance of making another high in this year. And there's only really been one failure at this. And of course, when was it? It was 2022. So with one high already booked for 2025, the potential of corporate tax cuts and everything else coming, do we think there's going to be another one? Well, the percentages would be in that favor. Another thing that's coming back into town is the CTAs. It looks like commodity trade advisors, which was something we really focused on here on the channel during the early stages of 24 and obviously 23. They're coming back in terms of momentum, and it was a very strong week of purchasing from CTAs. Now, as we know, this is basically algorithms. So in many cases, they're trend following and they're seeing what they believe could be another bull case kind of scenario. So that is a good sign, and we'll be bringing CTAs back to the Daily Show as long as they're kind of doing these types of things, and it gives us edge. So make sure to subscribe if you've never seen that before and you're interested in following along with it. Let's also talk about January, the barometer. We talk about the quads and, of course, what we're looking at when it comes to 4 great reads for every year and whether it's going to be bullish, therefore, or not. Now, the January barometer is the 4th one. We've lost the Toy 2 month, went a bit neutral. We obviously lost the Santa Claus rally. We got the first 5 days, and now are we going to get January? Well, of course, the data stats are pretty positive if we can get January, and we'll be reporting on that when the time comes. But at the same point, the pullback that we've seen so far has also reset a few things. It's reset Goldman Sachs sentiment indicators, which is good, and it's obviously reset just general sentiment. The bullish favor that was happening post-election, I think we got up to like 56% of respondents being bullish. That went down all the way into the 26s, which was an absolute phenomenal move in terms of going from bull to bear from most of retail sentiment. But as we know, Wall Street likes to buy when there's fear in the street, and that's exactly what they did. Now, why do we think that markets might or potentially could go sideways this week? Well, a lot of it has to do with this McClellan oscillator. And a lot of you guys know that when something moves really quickly, sometimes it needs to take a pause. Now, according to the McClellan oscillator, we generally will get after this read, which remember was taken literally the middle of last week, Thursday last week. Basically, we usually go 1 week later, we're actually down in the markets. And that's kind of symbolizing a pause, or what we call a pullback in time of markets. Doesn't mean that's a super bearish or anything like that, but it certainly means that you could say, well, everyone might be a little bit bullish. Maybe it's time for us to get a little bit down. What does happen though with these huge momentum shifts is the stats turn very favorable when you look out past 6 months. So 6, 9, and even 1 year later can be very bullish post these events. Let's now take a look at earnings season, because of course, why is this market so bullish? Well, banks have done well, TSM's done well, which is a semiconductor stock, and of course, we've seen Netflix go ballistic. At the same time, it turns out 7 sectors are reporting year-on-year increases, which, as you guys know, based on a stat we'll share soon, is very good. We also know that 5 are reporting margins above their 5-year averages, and everything seems to be pretty much perfect when it comes to market earnings and forward projections. But this week is still not locked in just yet, because we do have some big moves. Tesla's expected to move, according to the options market, plus minus 9%. Meta 7, Microsoft 4, Apple 4, Intel 9. There are some big moves coming. And if you're not aware, you must make sure that you know the type of volatility that you're in for. I mean, look at SoFi here on Monday, 13% plus or minus according to the options market. So that means there is going to be a massive spread on that day when the earnings comes through. Always be aware of these things. We do report on it every single week during earnings season, so make sure to sub for that as well. So guys, what actually is going on post-election? Is this pretty normal? Well, the answer is yes. We usually see a rally through January. We generally then get into Feb, and somewhere in Feb, sometimes the markets can take a little bit of a dive. And that doesn't necessarily mean it will. I mean, you can see here the different types, but it's something you should keep in the back of your mind anyway. And as you guys know with seasonality, it's all about watching the price action. And when we're talking about price action, are things on track to get us even higher here in 2025? Well, again, it comes back to this one. We talked a lot about this when the Federal Reserve did their first cut, and we said it depends how the structure ends up over 3 months. Well, now we can come back and actually look at the structure. And as you guys know, we are following literally what they would call normalization. The market is not freaking out at all about a recession or even a growth scare. It's almost the perfect scenario. Now, for now, that's what the market's looking at. And of course, that is a good sign for the valuations and earnings and maybe the continuation of this bull cycle. But ultimately, it will come back to earnings. And as you guys know, it's going to be about all of these big banks and all these institutions doing really well in this earnings season. And so far, that is pushing that 80%. So this is, again, another stat that basically is telling us that for now, the markets are bullish, with dips most likely being purchased. Never forget about that insider stat, though, because they are starting to sell. It has, and even the puts, you've got to keep it in the back of your mind that at some point, something very bad could happen. Remember, complacency is the killer. And you guys do not want to be complacent. We do not want to be complacent in 2025, 2026. These are the years that possibly could shape, realistically, even the potential of a lost decade. Now, let's talk about the dollar index and Trump. Was it a buy the rumor, sell the fact? Well, this is absolutely the case that it seems to be doing right now. And we already knew this and we've been talking about it. But here's 2016, here's 2024, and obviously we're starting to see the US dollar drop off. Now, that's that classic tariff talk that comes in the news. And it's why we have that really important statement that we always talk about, which is if it's in the news, it's in the price. We obviously have to be above and before that, and we do so by looking at the stats and, of course, sourcing some of the best information on the internet for you guys. Now, let's talk about the US dollar. We already reported on this, a week and a half ago. We talked about how the US dollar was way too bullish. It was getting ballistic, and that when we see this, we usually see gold go the other way. Well, what has gold done? It's gone crazy. I mean, it's literally gone up a lot since we started talking about this, and it could be on track for that 3,000 that we've now discussed for the last 18 months. What else is happening, though, that's a little bit against the norm? Well, it's got to do with China, actually. And of course, US dollar down could be good for China stocks. But look at the short interest here. The short interest is ballistic. It's really high. And at the same time, we're seeing outflows at record lows. Now, this is from Subu Trade. And we did use this exact same read last time, which was when we see record outflows, that is basically fear. Let's be real. People have fear. Look at the greed into the fear. I mean, what is going on here? They're absolute jokers. And I still remember when the greed was coming through, I was on TV and someone asked me a question about whether I thought it was hitting resistance. And I said straight away, yes, I do. Everyone's way too bullish on this. And of course, it was a great technical level at the same time. We hit into that technical supply. And yeah, I mean, look at the switch change here. But when we generally see these record lows, these massive outflows, that's actually been a bullish catalyst for markets. So something to keep in mind when you're taking a look at what's going on right now. What about Bitcoin and gold as well and everything else that's happening? Well, of course, we've got Bitcoin, we've got Ethereum, and we've got markets generally being quite bullish across the board, post, of course, that change that Trump did to the legislation. Now, one-day inflows were both up on each one this week, and dark pools, of course, were also really, really interesting. We saw huge moves coming in there near the end for both the S&P 500 quality ETF, and we also saw it in the ProShares Ultra double Qs. So basically, we went from a massive dark pool to another massive dark pool in terms of probably a take profit somewhere around this zone. Now, it also could be an entry. We did see CTAs buying in, but just remember it happens at resistance. So that often means that we're in for some sideways or maybe even a possible down until it rallies up. Would I be concerned? No, I'm probably not that concerned about these dark pools at this stage. And you can see how the price interacted with that level during the session. Now let's go and jump into the charts. Then we'll look at the options flow. And first up, we need to look here at the S&P 500. All-time high, 6,100. Guess what it is? It's a call wall. And we know there are tons of options at this level. And of course, if we do get through them, we end up with positive gamma and we keep pushing, my belief at least, until 6,200. 6,200 is the next major level. What would I like to see though? Well, the general market, something like this, a 59.50 and then rally up would be really cool support. You've got moving averages, you've got the trend line, you've got a break back down to this level. And all of this stuff kind of, is very, very interesting when it comes to the markets. The US 500 has also seen on the futures here a little bit of a read of potential exhaustion, and no wonder why. I mean, it was up 1, 2, 3, we'll call that 4, 5, 6, 7, 8. It was quite a lot of days up in a row pretty much. And that 59.50 again was the key level that we saw a lot of participants at. So we got basically a bunch of trades coming through that exact zone. So again, if it comes back down, that could be the level. Here's the options high and lows for Monday. So what about the options? What are they telling us about the markets right now? Well, guys, the 6,100 remains pretty much the main key level. This is the call wall that we are watching. And of course, if we manage to get through 6,100, you're in positive gamma. And that basically will flow up to what we believe could be the 6,200 zone. At the same time, we've also got things like 59.50 and 60.50 for the Monday in terms of put walls. So these are kind of where you'd expect some potential buying from the algorithms should we get down to those areas, at least initially. What's going on with Tesla though? Well, it's still stuck in the same area. 400 and 380 are the two put walls, and around that 440 mark, 450 is where we're seeing the call kind of congestion. So basically it's stuck in the middle of nowhere land for now. If it does break through 380 though, I'd be starting to get really interested around it in the 330, 340 range. That's that level we've got on the charts later on. What about NVIDIA? Well, that 150 is too much. 148, 150, hits it, sells off, hits it, sells off. Is there anything more predictable? We are in kind of a level of positive gamma at this stage. We did make it through 140, which is good. We closed at 142.62, but as you guys know, that big 148 area is what we're looking for. So guys, just before we jump into the charts and we take a look at all the key levels, I want to say a big thank you to the sponsor of today's video, which is of course Tiger Brokers. Now, Tiger Brokers are offering a bunch of special offers, especially if you're from Australia, in the description down below. You get an additional $60 cash voucher when meeting their T's and C's, and you're getting 0 FX fees for a limited time. Now, that's important for anyone that wants to invest in the best market in the world, which obviously is the US. And you guys can see here the competitive fees when it comes to Tiger Brokers. Now, for many viewers, you may not be aware of this, but it can get pretty expensive when you're starting to buy some decent quantities of stocks. And as you guys know, it's all about being able to keep those costs down so you can, of course, end up hopefully with a bit more profit at the end. You can see here some of the rates. And as you guys know, the big thing about Tiger Brokers, at least for me, is not just these FX fees, not just these swaps, but it's the 24/5 market, which allows people that are not in the US time zone to potentially gain access to huge amounts of stocks, some of the best companies in the world, and of course, do it in a time zone that is more friendly to them. A big thank you to Tiger Brokers for sponsoring today's video. And if you're interested, check them out in the links in the description down below. All right, let's jump into the charts now and have a look at everything that's going on with the options market and bonds. As you guys know, when this chart's down, generally it's a good sign. And so far, so good. We haven't seen too much of a pickup in fear or anything like that in the bonds options. Where people are starting to look at things, though, is the difference between the VIX going down and, of course, the VVIX, that is the volatility of the VIX, staying quite high. We'll have a special report on that in our next video, so make sure to check and stay tuned for that. But for now, things like high yield junk, corporates, everything seems to be okay. The big discussion from bonds guys is pretty much all to do with the same thing, which is, of course, equity risk premium. And we've talked about that before. What about XLF? What about the financials? Well, they're all going up. And as you guys know, if we got financials going up and you've got generally home builders going up, nothing too much to be worried about in terms of a massive dip. What about the US dollar? Well, it fell through last week, actually closing near a new low. And this is a pretty big deal because, of course, we haven't seen the US dollar weaken for months and months and months in quite this way. The euro tipped us off to it, and we still think there's definitely more in the dollar. There's a good chance that it could continue to move to 106, and you'll notice that we've only hit the first supply. Now, the euro was the trade here, and we first reported it back in this breakout. We talked about it down here, and I've got to say, well done, guys. That was pretty nice. And at the same time, it could get even nicer if you're able to break through 106, because that could get a lot of swing traders to start coming into the big euro and, of course, US dollar down. As I always say, if it's in the press, it's in the price. And this is an example of why you need to think for yourself and outside of the box. That is certainly not the narrative that was going into the Trump inauguration. Let's talk about other narratives out there right now. And of course, the one we've been going with for 18 months plus has been gold bull. And why is that? Well, there are many reasons that I like gold. Of course, one of those is central banks are buying it. But at the same time, if we break out here, could we be going for 29.50? Now, 3,000 is the target everyone has, but at the same time, we're looking for probably even more, but 29.50 could be that sneaky area. So I've done some fib extensions. I'm thinking 29.50 is a possibility in the future. What about silver? Struggle town. 31, too much for it. Ends up as a doji here. You can see long leg doji. Obviously, it's consolidating it around this zone. And if it does break out from that 31 plus, it could be an excellent trade. So we'll check out that one from the TA side very soon. US oil breaking down, no surprise for us. You guys knew this. And 73.50 is, of course, something that we will be looking at. So it's getting close to that point where you could see buyers. We're in that demand zone where buyers could come back in for oil. Again, everyone's making the narrative of, yeah, we're going to see oil go lower post-Trump, but we don't know that. Let's see what the price does. What about the Tesla trade? Well, it's still stuck between 450 and 380. And as you guys know, we're looking at kind of like 340 to 350 if we can, if the market does end up weakening a little bit here. That would be a pretty key zone, I think, for Tesla. Apple could be building an island reversal. As you guys know, the big thing here is a gap down. Earnings this week will probably take it one way in a big way. And yeah, there could be an interesting trade here indeed especially if Apple reports well. It's trading in its most traded range, and we just need Pelosi to buy it up because remember, she sold it back in December, and she's been a god trader recently with all of her moves. So if she's buying, well, maybe you want to be as well. For now, though, she's got that sell on it from December. Let's take a look at NVIDIA. This 150 is too much. Take a look. 1, 2, 3, 4. NVIDIA traders are absolutely nightmares at the moment because, of course, we continue to see buying down here, which is fine, but we continue to see selling up here. A lot of people building a Wyckoff with the case of selling and this being the end of the market. You need to keep it in mind. It's certainly a concern here on the NVIDIA charts, but we don't know that yet. So let's go with the bullish side for now because, of course, semiconductors have broken up and they've looked a lot better. HSI, you'll notice here a bit of a change of trend potentially coming through. So, of course, China stocks doing well off that weakness in the dollar, and we just need to break through something like 20,200 to really get a few swing traders back on board that trade and potentially do a bit of squeeze. What about US 2K? Looks good. Price action looks good. Obviously, we kind of expect something like this to potentially happen. But in general, the US 2000 data stats, as we've shared many times over the last week, go back and watch our previous video, still have, favorability towards them. The NASDAQ hit resistance, finds a few sells in terms of dark pools over the last couple of days. Maybe it's going to come down. Again, some key levels to watch this week, 21,200 if that does happen. And if you're bullish, it's resistance, but it doesn't look too bad at this stage. It looks pretty good. Speaking of looking pretty good, Solana, some people will say this is kind of making a pennant. That's actually quite a bullish breakout if it does happen. And again, holding in this consolidation range is not a bad sign. Ethereum, could it play catch up? This could have a sick trade on it. A 3,500, 3,450 break close would be a huge deal. Ethereum has got the most memes on it right now. People hate this coin, but at the same time, got some great TA behind it if it does the good stuff. And Bitcoin, of course, very similar to the others. Series of higher highs and higher lows as it consolidates near all-time highs. I don't think you can really be too bearish on cryptos at this stage. Flows are going up. There's a whole bunch of news, of course, coming out with the Trump administration. And in general, it opens up all sorts of things that could go bad in the future. But for now, they kind of look semi-bullish. In terms of the news for the week ahead, guys, remember, we are in bank holidays for China. So that's going to be, a big kind of story there. And of course, we do have some data stats coming out, GDP, etc., for the US. But it's really down to those earnings. And the core PCE will be important on Friday as well, which happens at 8:30 a.m. If you want to follow along, make sure to do so in the links in the description down below. Check us out on X. Also, check out our Perth and Brisbane trading events if you do live in those respective areas. It's going to be awesome to meet you guys. And remember, the sponsor of today's video is Tiger Brokers, and they've got a whole bunch of special offers for you guys down below. Thanks so much for watching. You have a fantastic weekend. And guys, remember, if it's in the press, it's in the price. Patience, react, don't predict. We come from the abundance mindset, ideally. There's always another opportunity. No FOMO and no fear.